Auto parts bankruptcy is the first big casualty of tariff war. June 12, 2025. A key supplier to Nissan and Jeep owner Stellantis filed for bankruptcy protection, marking one of the first big companies to collapse under the weight of the Trump administration's tariffs. Marelli, which supplies lighting and other internal electronics, has been struggling with losses and a hefty debt load for years. It said it expects to continue operating in a deal with creditors and lenders that will provide more than $1 billion to finance its restructuring. The company has more than 40,000 employees around the globe. It was formed in 2019 when private equity firm KKR bought a Fiat Chrysler auto parts business and merged it with a Japanese-based parts supplier it owned. Marelli chief executive David Slump said in a court filing Wednesday that the company had already been struggling with long-term supply chain issues stemming from the COVID-19 pandemic when its liquidity position began to worsen in March due to macroeconomic headwinds associated with the imposition of tariffs in countries around the world. The Trump administration announced sweeping levies on imported cars and some auto parts in March, disrupting some manufacturers heavily reliant on production in other countries. Slump said that Marelli was severely affected by tariffs due to its import-export-focused business and the imposition of tariffs specifically against automotive manufacturers and suppliers. In his declaration, Slump said the pandemic restricted access to both raw materials and the labor market and set off a series of events that led to Marelli being unable to sustain its nearly $5 billion of debt. Even after the pandemic subsided, the impeded supply chain for semiconductors had an acute effect on automotive production. Car parts suppliers like their carmaker customers have poured billions into the transition to electric vehicles, retooling plants to prepare for making new parts for new types of vehicles. But slumping demand for battery-powered cars and trucks in recent years has prompted big manufacturers such as Ford and General Motors to shift their plans to match consumers' preferences. That often means fewer orders for suppliers from big car makers and less opportunity to recoup their big upfront investments. Marelli's restructuring, supported by more than 80% of the company's senior lenders, is expected to convert a portion of its debt into 100% of the common equity in the newly reorganized company. By The Wall Street Journal, story by Alexander Gladstone, Ben Glickman, June 12, 2025.